Hi, this is Stuart Weems and welcome to the Investopoly podcast. My goal is to give you simple, easy to understand strategies, insights and tips to help you master the game of building wealth. And in this very short episode, I just wanted to provide an update on some changes to Queensland's land tax rules. So if you own a property, an investment property that is, in Queensland, and you own property, an investment property in other states, this will apply to you. So in February 2022, the Queensland announced that they would make some changes to land tax in their state budget. And it wasn't until mid-July that they released the details in regards to these changes to provide a little bit more detail on how they're going to apply. But essentially, what Queensland is going to do is that they are going to apply land tax to property across Australia, not just that property held in Queensland, and work out how much land tax you owe in respect to that property, and then they will apportion that total tax liability to a part to Queensland. So for example, if you own 1/3 of your land in Queensland and 2/3 outside Queensland, then they'll just multiply that amount by 1/3. So let me give you an example. If Gary has two investment properties, one in Queensland with a land value of $800,000 and one in Victoria with a land value of, say, $1 million. So total, and neither of these properties are his principal place of residence, so total land value of $1.8 million. At the moment, Gary would pay only land tax on $800,000, and because he's got a land tax-free threshold in Queensland of $600,000, he really only pays tax at the rate of 1% for the $200,000 that exceeds the $600,000 threshold. So really his land tax liability is $2,500 a year. Under the proposed change by Queensland, what Queensland will do is they'll apply their tax rates to the full $1.8 million of land value that Gary owns, obviously part in Victoria and part in Queensland, which means that he has a liability of about $17,700, but because 44% of his total land ownership is in Queensland, they will multiply that $17,700 by 44%, which means that his land tax liability increases from $2,500 a year to $7,866, so a threefold increase. Now, Queensland has some practical challenges to implement this new regime because it has to get people to establish an account with what's called the QRO and then register any interstate properties, that their address and value and details and so forth. I don't know if Queensland yet has a way of data matching and then auditing these declarations, but assuming these rules stay in place for any reasonable amount of time, I'm sure they'll find a way to do that. But I guess the first year of rolling out really requires people to go in and make that registration. And you've got to do that within 30 days of receiving a tax assessment, a land tax assessment, or by 31 October 2023. These changes, by the way, don't begin until 30 June 2023, so about another year. So if you're like Gary and you're used to paying about $2,500 of land tax and your land tax is going to go to $7,500, you're going to think really carefully about whether you want to retain your property investment in Queensland. So I think one of two things will occur. Landlords will seek to pass on some or all of the increased cost onto renters, or some investors will just turn around and say, you know what, I'm not going to invest in Queensland, forget about it, I'll sell the property. And they might end up selling that to an owner-occupier, which means that there's fewer rental properties available. Either way you cut it, it's going to result in a rental crisis in Queensland. So that is that the supply of rental properties will reduce and the cost of renting will increase. And we all know that renters are a certain demographic that typically can't stomach large cost increases. So it's going to cause some problems there. But in reality, I don't actually think we have too much to worry about because, of course, I own a investment property in Queensland, so I'm impacted by these changes in rules. And I'm reminded by the fact that back in 2005, I recall that New South Wales introduced a vendor duty. So if you sold an investment property in New South Wales as a vendor, as an investor, you had to pay the government, the state government, 2.25% of that sale as a tax. And of course, whoever purchased that investment property from you had to pay stamp duty on the other side as well. A really ill-conceived tax that really caused problems in the market. And I can't remember how long it lasted, but certainly within a 6-month period of being rolled out, they abolished that vendor tax. And look, I think Queensland's going to be the same. And why a government doesn't think through these policies before they implement them is beyond me. But I just can't see, notwithstanding that other states are going to be a little bit grumpy that, Queensland's taking a greater share of the tax revenue that they could otherwise take. Notwithstanding that, I think there's going to be too many negative consequences for Queensland themselves, and particularly the property market, and it's going to impact votes and voters. So if it gets, a year's a long way, a lot can change in the next year, so I'm not even suggesting it's going to be implemented as proposed. But if it is, I doubt it's going to last that long. So, as property investors, we're long-term investors. We know that taxation and rules and these sorts of things are going to change throughout the period of ownership. That's a given, but we've got to be really careful not to overreact to any of these changes. We really need to be able to test and measure to see what impact they're going to have. So my advice to property investors out there is certainly be aware of these changes, know that they're coming, but at this stage I wouldn't be doing anything. Of course, if they end up remaining in place and we don't think they're going to change very much, and it does give rise to a ridiculous land tax burden, well, then you're going to need to make some decisions at that point. But until we get there, I wouldn't. You don't want to have a knee-jerk reaction to these changes. Anyway, I wanted to record this special episode in the middle of my normal weekly episodes, just to keep listeners up to date with these changes and just to share my views on it. Okay, so until next week, bye for now.